The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here Monday through Friday, market days, and right here at 11 o'clock till noon Eastern Time, 877-927-6648. And of course, we've had some fabulous shows going all the way through from 8 o'clock this morning. John Logan, then you got Larry Pesavento, then you had Tom O'Brien, Tom and Tommy, in fact. And that was terrific. So let's go straight. We've got programming all the way through today. So we've got the Dow up 26 at 17,271. S&P's up 297 at 2,026. Let me move this away here. You've got the comp index down 11. That's interesting. 49.16. Bonds are up 9.30 seconds at 153.21. You've got gold up $3 at 10.84. Silver's down a tad. Platinum's down. Oh, copper, man, down at 2.10. That is just horrible. And of course, bonds are, the dollar is up. I thought I'd start off where I should have continued on Friday, but of course we had calls and we had questions, so I had to deal with that. It was my pleasure to do that, but let me just do this. I said it's very difficult in a show like this to discuss all the things that you're doing. I mean, I sent out, I should have counted, I don't know, maybe 13, 15 charts, maybe more, over the weekend into the 8:35 time frame this morning when I sent out my last chart, which is the Traders Corner. And just a comprehensive look. I looked at the markets. I looked at exactly the parameters. I looked at the major trend, which at this particular point still remains higher, up that is, but all the other trends, the shorter term and even the intermediate term, is very important because the weekly charts are sitting really on very important support. A break below would be a negative. Also, even before the futures opened yesterday, last night, I was mentioning that my Chapman Wave trend gauge, which kind of worked a little bit on Friday, really was still active. And then my impression was that we would still have a very sharp move in the futures, which should translate into the stock market in the cash indices and help the cash indices move higher. So this is what I'm looking at. The futures is the 120-minute chart slumped last night, crumbled down to the 1998.50 level. Now we've had a fabulous rally, a rally that's taken it to 2030.25. I mean, however you cut this, that is a 32-point gain, fantastic move up in a very short period of time, especially since we went down in an even shorter period of time. So that essentially says we've had the burst of energy that should result from an oversold condition. Now comes a really important, this first hour or so was really just the result of technical considerations. Now we're starting the rest of the day. We'll get into that in a moment. Just want to show you a couple of things. Here's the 10-minute chart, with what I call the naked chart. No technicals whatsoever. I do use the tools of an arch or a cup or the left side, right side price time match and dash trend lines. And that showed you that from the low of 1998.50, really fabulous signals all put together, went to a peak C1, C2, double top, pulls back, starts a brand new move to the upside. Oh, I forgot to put that up arrow right there. And basically, you've gone from that 1998.50 level to a peak G, pull back, and now you've had the single leg spike to the upside. I call it single leg A phenomenon. What the heck does that mean? What that means is that sometimes, due to extraneous conditions, could be a news report, it could be whatever it is a sharp response, a positive response to news, and then the real issue comes in when it pulls back. If it cannot hold about a 1/3 retracement and then start moving higher to leg B and then C, you've got to be careful because this could fail. So right now we're at about the 50% mark. We're into 2021 and running to 2023. I suspect that there's still more buying left for the rest of the day. The question was, would I be buying the S&P futures right now? Well, at 2022, I would have said if you had a 1.5 point, maybe 2 point stop, I'd say your risk to reward would be a 1.5 point loss to about a 3 point gain as a possibility. That's not that's not a bad condition. Also wanted to say, in the Chapman wave methodology, going from a trough to a peak D is really that is the prime objective. That's how the whole thing started, the 7-wave form that I began way back in the 1980s, early 80s. And it continues today. Look, here's an ABCD to 2087.25 in the 120-minute chart. Yes, you can go higher. That's not the point. The point is to be able to get you to that fourth peak leg, the seventh leg up. Now, here's something that's very interesting. Look, let's see if I can get this. I had it a moment ago. Yeah. So the question I often get asked is, does the Chapman wave work in all time frames? And the answer is, so we just looked at it in a 120-minute chart. We looked at it in a daily. We looked at it in the 10-minute. Here's, good grief, what did I just do? Here is I'll find it. Don't worry, here it comes. I did not erase it, so it must be right here. 10:50, there it is. Okay, have a look at this. This is a 15-second. No, was this the one? ESZ? What was I looking at before? Oh my goodness, that's a pity. Was that a 1-minute chart I was looking at? Ah, the 1-minute chart. Here's the 1-minute chart. So you go from this low established at 2013 on the E-minis, excuse me, and it goes peak A. Remember, all you're doing is counting each successively higher peak. Just as simple as that. It doesn't matter whether the peak is made or the leg is made by 1 cent, or in this case, 25 cents. That starts a new leg up. So you go to peak B, 2016, pulls back, immediately goes to leg C. C is at 25, pulls back 1 bar, and the 1-minute bar zips right along and it goes to a peak what? A peak D at 2030.25. Is that clear or is that not clear? I mean, you could not get clearer than that. Peak A, B, C, D. What do you expect at D? Something else can happen. Lo and behold, it does. And now we're just going sideways. We're chopping around and seeing what's going to happen. All right. Now let me do this. Get rid of the 120-minute bar, move it over there. I wanted to just do a couple of quick things, and then we're going to go to our callers. So the very first thing I want you to do is to show you that the TLT, right here, the TLT in ABCD made a peak D in the 120-minute chart is holding okay. Not great, but it's holding okay. It should be lower, but it's a little bit higher. It's at the 9-period exponential moving average, 119.71, up 3 cents. So my conjecture is that I think that the Fed is still going to be hesitant to raise rates because the market is very vulnerable right now, and overseas markets are vulnerable. Things are disquieting around the world, as we know from Friday night's terrible tragedy in Paris. And, I will talk about that stuff, but later. There's nothing to say right now other than our thoughts of the victims, innocent victims, I might add. Okay, so I wanted to do a couple of things, and I said I'd go to my charts. Before I go to my charts, I'm going to go to Mark in Denver. Mark in Denver, how are you?
Good, Basil. How are you today?
I'm well, thank you.
Good. Hey, you were talking about peak Ds earlier, and I was looking at AK Steel.
Okay, let's go to AK Steel.
Looks like it's possibly just made a C when it had its spike.
Right. So your big question here is, will this make the requisite D? Is that the question?
Yeah, it is. And then I wanted to see, if you have time to look at U.S. Steel, because it tested the left side low.
Okay, I'm going to just do something now. Yeah. You have my CD, right?
Yep.
Okay. Now, you know in the CD, I don't have it right now. There's a pattern that I talk about where the lowercase h can go to a lowercase m.
Right.
Number one. There's another section that I call about the restart. That's been the biggest frustration for everybody in the market, is what happens when you get a signal that looks good and then it fails. I have a whole panoply of ideas and techniques that you can deal with. But the most important thing is when you identify that a particular chart is starting to make arch formations, that's like a lowercase h, and keeps retesting the left side low and then breaks down or holds it, what you really want to see is, are there repeated peak B failures, peak A failures? Does it go to a peak C? And if it goes to a peak C, does it immediately go to a D, or does it take its time? In other words, is the characteristic that we're looking at of the chart pattern? You remember, I'm all about chart patterns. I'm very visual. I came about this through the visualization of chart patterns. If you look at patterns that keep failing, there are certain techniques that you want to use to say, aha, now we've got that pattern that keeps failing, but something different has happened. So now what are we going to look at? We're looking at AK Steel, AKS up 7 cents on a day like this, up to at 262, up 2.75%. The lower the price, the bigger the percentage, of course, move either up or down if there is a move. And what we're looking at here, I'm going to do this just for the moment. I'm going to grab, actually, you know what I'm going to do? I'm going to take this chart. I'm going to say copy window. I'm going to say paste window. Copy chart. Okay, paste. And on this one, Joe, but I don't forget, I'm going to go right here, remove. I'm going to remove everything on it other than the price, and I'll keep the technicals. So up arrow, down arrow, everything. Price extension lines gone. Okay. Now look at this. On the left side is a very elongated, sideways kind of a rectangle move right there. But out of the blue, you get a lower low with a beautiful candle that should have been the start of a big move to the upside. Well, in percentage terms, going from 2.05 to 3.19, I would have to say that that's a 38% or something like that increase in price. And all of a sudden, it comes back again. So now what I'm going to do is I'm going to color this one in. Let's call this one green. Now, let's call this one red. And now I'm going to do exactly the same thing. I'm going to grab a rectangle right there. And I'm going to say, wait a minute. This is very interesting because what we have is the potential, subtle bit of potential, for an inverse shoulder, head, shoulder pattern. That's number one. So now what I've identified is if the low of the 27th of October at 225, not the 205 low, was it 205? Yeah, 205 of the 28th of September. If that holds, actually even better if the low of Friday at 248 holds, you could see a move to the upside. That's number one. In this particular pattern, but it's a very long left side shoulder and a mini type of a head, and it's a fairly long so far right shoulder. So can you hold on?
Yep.
Okay, we've got Mark in Denver. We're looking at AKS, AK Steel, and we're going to do a dissection of that. When we get back, we'll continue with it. Dow is up 35. I'll be right back. Basil Chapman, Tiger Technicians Hour.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Dow's up 36, S&P's up 3.70, and we are on with Mark in Denver. We're looking at AK Steel. AK Steel up 7 cents. Now, this is very interesting. So, Mark, what I also like to do, as you know, I like to look at the bigger picture, and you will see that with AK Steel, it was making a cup formation, had a very nice series of peaks to the upside, went to the 200-period moving average, and then plummeted to the downside. What is upsetting about this move is that whereas before you had a low that was at 3.62 and it ran all the way to 580? 593 actually, on the 14th of May. This is all that this has accomplished so far is to go nowhere in the space of quite a few months. But here we're looking at the rectangle that formed a high on the 30th of July, 368, and they made a series of lower highs and lower lows. All of a sudden, we've changed that pattern with the potential for higher highs and higher lows, but it's still stuck in this range. So when I look at it purely on a technical basis that says no letters, no nothing, just look at the chart formation, I'm looking at a pattern that says the lowercase h has just continued into a larger H and then an M-shaped pattern or a series. You can break it into part A and part B, in both cases on the left and the right of that low that was made on the 28th. So now the big question is it worth taking, because it's a low-price stock? Now, I'm not saying cheap, I'm saying low-priced, at 262. Is it worth starting a position And then I get into something else. Now, actually, I want to get rid of this because I don't want to have a chart that I'm not going to use over here. So, okay, gone. Now, this is the big issue. If I go to the 120-minute chart, I'm looking at something that says very sharp move from a peak E to the downside, a little bit more than 50%, and that says that the base, that base right there, at 270 should hold, and it went to 248, even lower, but it is rounding, and then it got repelled this morning at the 274 level, the 200-period moving average. So my big thing here, I looked at steel Thursday and Friday, and then again over the weekend, I looked at the SLX, that's the steel ETF, which isn't really reflecting the best. It's really reflecting more the worst of the steel stocks. And I'm thinking that because it's at 262, all it has to do is drop 10 cents, and that's like a 5. You know what I'm saying? It's a 4. It's like it's a quick loss. And then what happens is you're kind of stuck because now it's starting to test close to the 248 level. It takes that out. You have to expect that it's going to move down. So the more I looked at these stocks, and I'm going to include U.S. Steel now because I want to get a good feel for, you see, U.S. Steel has got a worse pattern in that it's only an M that is really breaking the low that was made on the left side of 966. It went to 942. And the other one I did was Schnitzer Steel. Sorry, Schnitzer Steel. And that has a much better, out of all of them, I've liked Schnitzer Steel the best for a while. It's more expensive in terms of price at $15, but it's a much, much better chart pattern. But it's not a great chart pattern. If I went for any one, I prefer to go for Schnitzer, and at the same time, I'm not really prepared to bite right now. So I'm going to, you know what I normally do is I say, you can just nibble here, and I don't even want to nibble. I think that the way I'm looking at it, the criteria that I like to use, none of them are positive, other than that it has made, on a short-term basis, has made higher highs and higher lows. But the pullback that it just made is just, it's just a little too much for me to say that there's a good risk-reward. After all, if I'm looking at risk-reward on a percentage basis, at 262, if you nibbled right here and had a nice bounce to 270, or even today's high, retested 273, then I'd say, great, now you've got a comfortability factor. But what if you get in at 262, and I have to give it, it's just a $2.62 stock, I have to give it at least 15 or 20 cents leeway. If it does pull back to the 242 level, now I'm looking at a much greater risk reward because it could very quickly slip to the 230s. So risk reward, I'm just going to say, I appreciate you bringing it up, and I think you have your eye. You're moving in the right direction by looking at the stocks that have gone just sideways but haven't broken down yet. But at the same time, I also have to put fundamentals in. And the fundamentals are saying that there really looks like a very strong slowdown is unfolding in the economy. And the steel stocks seem to be reflecting that. So, Mark, I think I'm going to say hold off for now. Let's look at it. I'll have to apologize to you if tomorrow it's trading at 278. But I just don't see it right now. Okay?
All right. Bye-bye.
Thank you very much. That was Mark in Denver. Sorry to take so long, folks, but I want to be thorough, and I'll just show SLX as we go into the break.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Taiko Technicians Hour. And I sent out 13 charts over the weekend into this morning. So here's the S&P with the channels. I'll discuss this in great depth, how these channels have worked. What's the coincidence in this factor right here from 2000, the tops in 2000, and in the top in 2007. And this is the S&P monthly. And the very long term. I talk about these channels. I talk about the Chapman Wave inside track, support and resistance area. There's another one now. Let me show you. So these are the charts. This is the opening call by Basil Chapman, Chapman Wave. So let's go. We won't do that one. I showed this one because I thought it was so important. This is the Dow Diamonds, the DIA, the trading vehicle, trading vehicle for the Dow. I showed the 200-period exponential moving average right there. This is that kind of, let me see how you can miss. Yep, it's light greeny blue color right there. I showed the MACD turning down sharply, the stochastic right at 5.35%. And my contention was, and this was sent out way before the futures opened Sunday night. This was, I think it was Sunday during the day. I sent this out saying in the Dow Diamonds 120-minute chart shows that the diamonds are sitting right on the 120-minute chart. Then I discussed how previously you broke that, and then it still became an important level because the diamonds back in October, first week of October, had to form a base on that level once it broke out. So what my suggestion was that we should look at this, that even if we went a little bit lower, we should be rallying, especially based on the Chapman wave trend gauge, which suggested that within 2 days, we should get a very sharp 9 to 11 point S&P futures rally. Usually it's overnight, but it could be any time, which should be reflected in a positive cash indices, which we've seen. So this one was a prediction about a rally, and that's what we've got. Right here, I show this is a stock that we are short, but we also bought the options, 2 options. This is an option that gave us 122% gain on Friday. The remaining option that we have is a slight loss, but I hope to be holding it. And this is the 250 put, but it made the Chapman wave A, B, C, even though this is a closing price. That's all it does, and a D. And now it's trading at about $4, I think. So close that window. I talked about Orly itself, Orly the stock. I showed the chart. I showed that in the very larger context, you've got a massive move to the upside. It's the funniest thing. I must have passed on Watertown Street. Yeah, if I said 1,000 times, I'm sure I'm exaggerating to the low side over the years. And there, I always see AutoZone on the way into the Watertown Mall area. And lo and behold, on Sunday, I saw O'Reilly. Just a little place on the right. I never even knew it was in the same area. Anyway, so O'Reilly Automotive, Auto Parts, has been a fantastic winner with AZO, AutoZone, and others in the area. AAP, American Auto Parts, is that what it is? Took a huge hit the other day, but it had a spectacular move. It was the real winner in the sector. In those sectors that moved to the all-time highs in 2015, but I identified that there could be a top being made. So we went short Orly recently. The high was 277.96, made a 273 round number open on that on the 29th of October, and then that was the top. And there was also the Chapman wave 2-bar. It turned out to be a 3-bar reversal pattern, which is just a potent technique. And that said that you should be pulling back. And yep, it pulled back and it filled this huge gap from the earnings. And we've been short from, I think, 272.96 or something like that. Oh, it says right here, 73.01. And trading at this moment, it's at 261. It went to 259. Lower than 259 on Friday. But this is very important because it's part of what I look at in terms of the economy. This is suggesting that the 17 million, the projection of autos being sold, new cars, has the inverse effect because that means more and more people are not putting money into the 11 and 17-year-old cars that they're holding. They're saying, hey, I've had enough. I'm going to, the rates are so low, I'm buying. And that's what they're doing. And that should impact negatively the auto parts area. So we'll see. This is a position we still hold. Another one, CTAS. Is that in here? Should be. Right there. Cintas. This is a overalls, clothing rentals corporation. Cintas core. You see the little trucks driving around. It made an all-time high. Look at the spectacular move. And there's still a spectacular move in the monthly. I'm just trying to get ahead of the game to see if we can use the Chapman wave as we always do to time major tops. So that would be a hat-trick top, but we don't even know if it's so far it's just a sell mode in the daily and a sell signal in the weekly, but it hasn't done much more than that. But it has gone from the 94.36 high. We are short at 92.28. 2 points off the high. The other one was just a couple of points off the high as well. So this is the big issue, that if we're able to correctly assess this, this is talking about the economy, I believe. And that's the reason why I'm saying there could be a slowdown that's underway right now. So there's the 120-minute chart, there's the daily on the left, the weekly with the Chapman wave stalk leg formation, made the oval body, made the neck, made the head. This is the beak formation. The beak always comes right back to the oval body top, which is 89.74. We're underneath that. So that means that we've already succeeded in this. When the beak completes, it sometimes gives you a fabulous rally to the upside, but it hasn't completed yet. And that's a weekly chart. There's a left side, right side, price time match. I wonder if it came in exactly today. Let me just have a look. CTAS. Today was the day. Yep, there it is. exactly a left side, right side price. This is a technique I developed over many years. Left side, right side, Chapman wave inside wedge target line, this little pink dash line you'll always see. That target line said on the, whoops, where is it? Right there. On the 16th of November, you should be testing the left side low of 88.91. The low today is so far 88.30. So those are the techniques that I use, and I just sort of take a moment because, you know, you talk about this, but the eyes glaze over. Rather see it in real time. I'm trying my best just to show it. Let's see if I can get back to this here. Close the window. Show you something else. We've got, let me see. Oh, here's the Dow. Look, the Dow in my daily report. This is what I show every single day. This is the Dow chart with the Chapman wave notation. Made a peak F top at 17,977 on the 3rd of November. It came down sharply, and it had right here a left side to the right side price time match, which is today or tomorrow to test the left side. Oh, I'm using the fixed chart. I can't do that. This has to be right here. And I'm using this low right here as my target low, this one right there. And that is 17,180. Today's low is 17,210. Hasn't hit it yet, but this is exactly on the day to the time. So we'll see. And look, the MACD and stochastic are still very negative. I can only consider this as a bounce within the context of moving lower. But there are a couple of things that we've got to look at very closely. Now, let me just see if I can do this one more time. Right there. Okay, close window. And I want you to look at, and every day I show the overview section as well. That's the daily, the Dow. I give a very big report on that. Then I give also, within the context of these 5 quintiles, you've got 120-minute Dow chart, the 120-minute VIX volatility index. You've got the Richard Arms Trin index, and you've got with just the bar charts of the Dow and the S&P dailies right here. So these 5 sectors within the context of my overview section give me a whole bunch of things that we'll look at, and I discuss here exactly what we're looking at, what's gone on up until now, what we're expecting within 2 days. There should be a sudden 9 to 11 point S&P future rally. Okay, so close that window. And I just thought I'd give you some kind of a heads up. Then all these other charts are pertaining to the very much longer term view, where we are, what we're looking at, what are the support levels to be looking at, etc. So I hope that helped a little bit, just giving you a sense of what I do for my subscribers and why I do it. It's just really important for me to be able to, actually, I should do one other thing here. The techniques I use came about, most of them came about by themselves. I didn't go out looking for a Trin gauge, or I didn't go out looking for left side, right side price time match. Just over the years, I found that these things happen so often. For instance, this Trin gauge has about a 98% accuracy rate. One of the things that I often show is, and I've shown it here, is that there's an arch in the 120-minute Dow corresponding to a cup in the VIX index. And what happened when we would just say right here, I was talking about it and I drew it in. Now, we were actually short the Dow, very, very short the Dow, and long the volatility index, took a little profit or break even, and we used other indexes that we are short, etc. But most importantly, I was really stupid. I mean, there's no other way. I'm being polite. I was more than stupid to have gotten out of our position. We got in so well. I just suddenly looked at a General Electric acting well. There were a couple of stocks that were acting well enough that I thought, I don't want to take a loss on a nice position. But that was stupid because that was the one moment to hold it. Okay, so I got that little rant out the way. Now let's look at this. Most importantly, there are sectors one by one that I've been talking about. Remember, the IBB was a sector I said eventually when the IBB starts to collapse and give me the hat-trick top indication, that is the monthly chart, because the daily has gone to a sell mode, the weekly has gone to a sell mode, the monthly needs to go to a sell signal, at least to say that there's a chance of months of downward move before there's ever an attempt to go to the old high. So that was the one, and that occurred back in July. When I looked at the SMHs, I've been talking about it for a while. That occurred also, and that was, I think, in October. Yep. And no. The high was way back in 2000. That was in June. So we've got all these sectors that was, look at this amazing move up in the SOX, in the semiconductor index, SMHs. And then it just stalled. So one by one, in fact, we are short via the 300% short position. We are long that short position. In the SOX index. We've had huge gains in the SOX index over this year. We've had I think it was a 100% gain, 22% gain, and we've been short now, so there's a nice gain. But this is a very important index. Why am I mentioning it? Because I'm going one by one. Look, so you've got the semis, you've got the IBB, that's the biotechs. Now you've got to be looking at the XLV, which is the last one to tank, and that is it took all the way to right there, late July. And that's the S&P Select Healthcare Spider Fund. This is just showing signs right now that it is about to deteriorate. Hasn't really deteriorated yet. Of course, it did go from 77.40 down to 56.63. That was a huge move. But this looks to me like it wants to fill in a chunk of that, because that was just an aberrational move. And then you've got the transportation index. We have no position there. Failing. Look at that. It started way earlier. It was a heads up back in November of 2012. You got the IYR, the REITs. Nice move today, up 53 cents at 72.79. But that 77.04 high, you've got to put it way back to the January 83.54 high, and that says that the REITs index, and this includes Simon Properties, and storage facility, PSA. So this is something to take seriously, to say we could have rallies, but something's going to have to happen that triggers another move to make an all-time high in the market, an all-time high, which I am anticipating at some point. But this is a really important phase that we're in right now. I'm forgetting one of the indices that I needed to do at the same time. But I have been impressed with General Electric. Look, even today, it's only down 15 cents at 30.15 after hitting 30.90. This is a stock that was trading at 19.37 and on August the 24th. At 30.90, I would have to say that those 11, those 11 points, that's quite something, right? So there are little sectors that are doing very well. That's why I think that this bounce that we've got has a little more to go on the upside. You just cannot think that you're going to go straight down. Not yet. There are always buys coming in. So I wanted to go through a bunch of those things to show you what my thinking is. At the same time, you had such a powerful move in the Dow. The New York Stock Exchange, I'll just do that right now. Not good. Just does not look very good at all. And, Larry spends a lot of time on the New York Stock Exchange, but I got a feeling, it's only a feeling right now, although I think I can make I got veracity if I can give you cogent points about what I'm looking at technically. There is some strength, but I'm a little concerned about the weakness. At the same time, for this particular period, this is almost like looking at the 60-year-olds and older as opposed to the millennials. And if you're looking at that, the way the millennials use modern technology, and the old fogies just can't pick it up. It's so hard. This is essentially the New York Philharmonic, the New York Stock Exchange is, in fact, the old fogies, and the Qs are the new ones. I'll be back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Well, folks, we're back. So I think I remember where we were before. New York Stock Exchange. Okay. KRE was a question I asked. SPDR S&P Regional Bank. So this is a very interesting chart because it's done extremely well. It's been almost impervious to major turns in the market. At the same time, made a doji candle high back on the October 29th? No, November the 6th. At round number 46 open, 46.33 was the high. So let me put that in. 46.33 high. 46 round number open. Okay, very important. So that goes in red because we've made a pretty big pullback from there. Gone from the 46.33 level down to the 43.5, whatever it is today, the low. Let me just double check. 43.41 low. And this is going to be very important. Now I'll explain why. KRE. This is regional banks. And the regional have been underneath the radar for a long time, is doing very, very well. Question in the den was, if we've got a peak C in the weekly, and there's no other way I can count out, although I'm going to discuss that in a minute, where are we? Well, in the Chapman wave methodology, let me see if that's going to be a D, A, B, C, D, E, F. Yes, either way I can count it. I'm calling this an alternate count with a Chapman wave instant restart right there. And that is at, in August of this year, 37.72, it finally bumped into the 200-period moving average. Now, remember, what do I talk about when I talk about moving averages? I use them in all different time frames, and I use them when they themselves are in different time frames. In other words, the 200-period moving average, would I even care about it when the KRE is at 15 or 16 or 20, and that is way up in the 40s? No, it's like a gap or something. Just until you get, it becomes something that's in focus, why bother? So this is the issue, that the 200-period moving average became resistance. That's what happens. Once it broke down, it never even touched it except for a couple of spikes. That was that May, yeah, there was a September spike back in 2008. And then it just kept going down, down, down. As it gets closer, that becomes a magnet level. As it becomes a magnet level, you have to start looking at it as a sine wave. It's going to cross the upside, it's going to cross the downside, and upside and downside. Keep doing that. But at the same time, the monthly chart is saying this is a Chapman wave potential flat base restart, an unconventional flat base restart. What does that mean? Hey, we're about to run out of time. We don't. All I can say is it means that from the signal that said it was about to go into an alternate count to the upside, it keeps pulling back towards the low, in this case, the low of 34.72 of the week of 9th of September of 2013. And it does it even again back in October of 14, it goes to 35.20. And then it does it again with that false break, the 35.01 plunge. Never took it out. Remember, 35.01 and the 34.72 is the level. And that suggests to me that we're in leg D. We could have a couple of more spikes to the upside, but at some point, watch out, we're coming back to test the 35 to 34 level. That's what the Chapman wave flat base, unconventional flat base restart is, in this case, a restart or flat base signal. So this is something that's very important. Why it suddenly coincides with what we're looking at. If I do take that aberrational low of 35.01 back on August the 24th, and I really shouldn't. I usually like to just put an X through it because it was really not tradable. Perhaps half of it was, but not the whole thing. Then it fits the exactly this whole thing and says, wait a minute, I could count that as a G, but I don't want to be too fancy here. Let's just say that this is a C, and that there should be a rally above 46.33 at some point. Doesn't say how long, but that will not take place if the KRE starts to trade under 42. Okay, as we're about to wrap up, folks, programming all day, stay tuned. Let me just do this real quickly. The Dow's at 17,305. Very strong resistance right there, the 200 period of 17,354. What's the volatility index? If the volatility index starts to rally,
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.